Good morning from Los Angeles, the finance headquarters of the capital. How's everybody doing? Good afternoon, wherever you are. So, interesting week. Um, Nvidia, obviously, we all know what happened there. I'll go through. So, let me give you a little recap. Obviously, I'm going to do a couple of topics comparing real estate to um, real estate returns in general to stocks over long periods of time, obviously. Then talk about the zero DTE options, DTE meaning day to expiration, how it's adding to volatility, and another topic. But I'm going to actually, so there is no market on Monday. Markets are closed. Actually, today is a bank holiday. Banks are closed, so markets still moving around, but low volume really. The other thing is I'm going to expand the watch list that so what I'm going to try to do is every Friday I'm going to give you guys my watch list for the next week. So there is your homework. You need to start looking at charts. You need to start drawing your lines. If you got your books, I will talk to you about my personal positions. And at the next Friday, I'm going to share my actual trading account results. I had shared it last month, so once a month. And leave me in the chat. Leave me some notes if you guys want me to do it twice a month, every week, whatever. I think every week will be too much because I do trade. I have many open positions and they can change minute to minute. But I think once a month is transparency enough. And this time I will show you guys that there has been no additional deposits or withdrawals from that account. Like I said, I start with $50,000 and then build it up or lose it. So, but besides that, my watch list is expanded this week. I'm going to go through each chart. I'm going to give you guys my opinion. Some of them are repeats, but I have added a few because you see certain movements in certain sectors that you always have to kind of update. And so you guys have some homework. And Monday there's no power hour, so please share the channel with your friends, loved ones, strangers. We definitely need the growth, but more importantly, I think we're putting out really, really good information and that anybody and everybody can benefit. And lastly, I sure hope you guys caught the first episode or inaugural episode of Insiders of Wall Street, the interview with the OG of trading, Jack Barugian, a good friend. Please go check that out. It had really good reception. And next episode is going to come up on Wednesday, part 2 with Jack, and where we talk about many different topics. He's amazing. He absolutely is. Hey, Techie B. So yeah, let's get going. And I'll answer the questions as usual towards the end. So the first topic is going to be comparison of real estate to stocks, what they have done. Now, this is just going to be a return comparison. Obviously, you can't live in a stock, right? You 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 need a roof over your head, and obviously, home ownership is the dream of every American. But should they be? Can they afford it with these days with the higher interest rates? Can somebody with a college degree now graduating with a 50, 60,000, 80,000, let's say, salary a year, can they afford to own their homes? I think home ownership is becoming more of a dream, right, these days, because we know what has happened to interest rates. Interest rates have gone up. Mortgages basically have doubled on the same house from a couple of years ago. Affordability index is extremely low. And if you want to rent it, and you know what happens there, rents have gone through the roof as well. So to me, obviously, homeownership is something every person dreams of, but you also have to make sure, can you afford it? Can you afford to keep it? Because a lot of people buy homes, buy their houses, and they don't calculate most of the other expenses, right? Like, for example, at my house, you have to, water and power bills have gone through the roof over the last couple of years. They have doubled. And you have a gardener, you have a poolman. I have a pool, I have a gardener. But I mean, these are important things that you have to figure out. Also, you also have to figure out maintenance costs, right? I mean, I'm sure when somebody buys a house, they have an inspection done, but you need to pay attention to these things. There are constant costs, right? Home ownership is not without a cost, not just like you buy it and you forget it. You have to factor all these things in, and you have to look at your income, right? Do you have a stable job? Are you between jobs? You have to make sure. But so 36% of Americans say real estate is the best long-term investment. Now, 36% is not a huge number. Now this, when they say real estate, it's not just home ownership, personal home ownership, your primary house, but investing in multi-units, collecting some rent. Basically, like Monopoly, we just buy as many houses as we can and we collect rent when they land. So, are the returns on investment keeping pace with inflation that we're experiencing? Well, my mentors told me that when inflation is around, which it is, to the tune of 7%, actually, when the government says 3%, I talked about inflation last week. That's not true. They're pumping in so much money into the economy, or they did, and for the past, I don't know how many years now, since 2008 actually, that your money is basically becoming worthless. That's why what's happening is to Bitcoin, right? And that's why asset prices have gone up. So to hedge inflation, one of the best hedges is real estate, right? Because hopefully it will keep pace. But is it, right? If you buy a house, you have a mortgage to pay, you rent it out, you can control the rent, obviously, but is it keeping pace with inflation? We're going to see what the returns are. So 36% Americans say real estate is the best long-term investment. Financial pros say they may be wrong. Well, everybody has a bone to pick here, right? I mean, I like real estate, obviously, because it's a tangible asset. It's an asset that, the prices have gone up over long periods of time, but it may not be what you guys think it is. So for years, they have done polls, right? And people in the US still think real estate is the best long-term investment. Well, here's a chart on the left screenshot. Real estate ranks at 36%. Stocks through mutual funds, not individual stocks, because we know what can happen to individual stocks, are second place, 22%. Gold is at 18%. Savings accounts, which we know what happened when the interest rate went to zero for 12, 14 years, that's probably not a good idea. You're earning zero and inflation is eating your money by, I don't know, 6, 7, 8% a year. Bonds, stable income, obviously, but then they do fluctuate quite a bit. And then cryptocurrencies, 3%. So real estate is in the lead, according to 36% of Americans. Are they right? Are they wrong as an investment? I think they are wrong, but we're going to talk about it in a minute. For many Americans, investing in real estate is likely means buying a primary residence, obviously, where we live. Like I said, you can now live in a stock or a mutual fund. And we know if you don't have one of those hocus pocus loans, you have a 30-year fixed mortgage that you're fixed, your payment is fixed. And we know on a 30-year, the first 18 to 19 years, you're basically only paying interest. Very little is gone into your principal, and then the last 11, the principal gets paid off. But now you're dealing with two things in real estate, right? You're dealing with price appreciation, and you're dealing controlling the rent if you do buy an investment property. So, to me, then there was a study done from 1990 to 2024. That's like 34 years. The S&P Case-Shiller National Home Price Index, which measures residential real estate value, has risen by 308%, right? So in other words, home prices have quadrupled over the last 3 decades. I mean, obviously, that's a long time. But in the same time, if you had invested in the S&P 500 over the same exact period, the 34 years, The S&P 500 with its ups and downs, and we know real estate had its ups and downs. I mean, in 2008, we know what happened to home prices when people were losing their homes to foreclosures because they bought homes that they could not afford to be in. And with hocus pocus loans, right? I'm guilty of doing some of those loans when I had my mortgage company. But so over the same period, same 34 years, the S&P 500 measure of which is the benchmark is up by 1,325%. So 4x, 4 times. So maybe the American public is wrong. Is it? We'll see. So here's the chart. As you guys can see, the dark blue line or purple line is the S&P 500 since 1990. Yes, it has its ups and downs, and it kind of correlates with the ups and downs. Home prices actually kind of correlate with the ups and downs in the stock market as well, because it's a major asset, right? And personally speaking, I bought my house in 2002. Okay, I've been in the same house for the last 22 years because I love the area, and in a suburb of LA. My kids have been born in this house. They are being raised in this house. One is going to college. One is going to high school now. So I'll give you the idea about my house price. I purchased my house in 2002 for $800,000. Okay. I had a obviously mortgage on it, but I put down close to 25%. And so when the 2000, before the 2008 financial crisis hit, I had an offer on the same house for $1.3 million, right? My wife and I said, no, we're going to stay here. We're going to retire here. We like the school districts, amazing school, charter schools. I go, there's no reason to gamble with the house. Well, I could have sold the house like a stock at 1.3, take $500,000 profit, and then gamble, right? Well, you don't do that with primary residence. But should you have done that with your investment property? Most likely, because a lot of people have lost their investment properties because they got into it with those, zero down loans or, adjustable loans, right? I mean, we know what people did. And Tiger Meg, we're going to have to talk about that. While stocks have been volatile, more volatile than real estate. Then from 1.3 million, when the financial crisis hit, my house went down in value to all the way down to $650,000. Think about it, 50%. That's pretty hard, right? But today, again, in the next 16 years, I could easily sell my house today for 1.5 to 1.6 million, right? And I already have paid 22 years worth of stuff, and I'm paying tons of principal now. So I have built massive amount of equity. So as you guys can see, over long periods of time, real estate is obviously a valuable asset. So that's why you cannot put everything in real estate. You cannot put everything in stocks. But the point of this segment was, stocks have outperformed real estate over 4-1, which is a massive, massive, massive outperformance. And to me, yes, you do need a primary residence, but please make sure when you do buy something, a house, that you can afford to live in it for a long period of time. And, it's not an asset that you can easily trade. It's not like a stock that you can buy and sell online. You have to deal with mortgages and banks and real estate agents and escrow accounts and all that stuff, right? To me, definitely primary residence is an important topic, and you should have a house. But unfortunately, we know the affordability index is not there. People cannot afford to buy homes, especially their first home. This was not my first house, but unfortunately, if you're just starting life as a couple, let's say in your late 20s, early 30s, you both have full careers. We know what has happened to house prices, and the affordability is not there as much as I would like it to be. So that's one topic. So next segment. So let me remind you guys, Monday, we're not doing the live stream. Markets are closed. Take a day off. Take a load off. I want to talk about, we all know about in the US, we have the Magnificent Seven, right? The Magnificent Seven is Apple and Google and Nvidia and Facebook, well, Meta now. all these amazing stocks that have created generational wealth for many, many, many millions of Americans. Okay. So I'm always actually interested in what's happening around the world as well, right? And we know since the pandemic, actually, the Chinese economy is not doing as well as it should be doing, but I have a feeling they're coming out of it because I can see the underlying stocks. As you guys know, Alibaba is one of my favorites. I came across this, and I'm really, really interested in this. When it does come out, it's going to come out sometime. It's going to be approved sometime middle of May, late May, which is coming up. They have created an ETF. So in the US, by the way, the symbol for the Magnificent Seven ETF is MAGS, MAGS, kind of fitting, right? And so now what they did is the same company who created that ETF is creating an ETF for the Magnificent Eight in China. Eight is a lucky number in China, by the way. So I think this is something we should be looking at. I'll make my point, or I'll prove it why I think you guys should be looking at it. And so Roundhill Investment, which is the same company that created the MAGS ETF, is coming out with LCKY, which let's call it lucky, right? And this is going to be the Magnificent Eight in China. These are the massive, massive billions of dollars of the company. So the holdings are going to be Tencent Holdings, which is these are all massive conglomerates, right? So Alibaba, Meituan, Boyd is the BYD, is the Tesla of China, Xiaomi, which is the Apple of China, PDD Holdings, which is the Amazon of China. And you guys know I love PDD, or PDD is Pinduoduo, which is the owner of Temu or Tamu. I don't know how to pronounce these things. JD.com is like the Google of China, or Baidu.com is the Google of China. JD is more like the Meta of China, right? So according to Roundhill's SEC filings on May 17th, these names were chosen due to their market dominance in technology innovation. I agree. So I am interested in this. When it does come out, I will pay close attention to it. The symbol is going to be LCKY. Keep an eye on it. That's going to be the comparable to MAGS in the US, MAGS, the Magnificent Seven. The SEC approval should launch about the summer. I would say probably late May, early June. Please pay attention to it. Make a mental note, but more importantly, start following it. Why do I like this? I like participating if China is going to come out of their recession. Exactly. Not that they are in one, but the growth has really slowed down. If they come out, guns blazing, I think LCKY or Lucky probably will outdo MAGS in the US. And there is one actually existing Chinese ETF, and it goes back to 2014. You guys can see the chart. It's the Crane Share CSI China Internet ETF. This is mostly internet stocks, and this is a lot more diversified than the concentrated 8 that Lucky is going to be. Look at it, right? Okay, so in 2014, it was about $30. Guess what? 2024, we're still at $30 a share on the ETF. Now, why do I like ETFs? They're very low cost, right? There's no slippage. But obviously, during the pandemic, we know what happened to all stocks around the globe. This thing was close to $100 a share, right? And then COVID hit, and coming out of COVID, Chinese economy slowed down. We're back to 30, but it is just getting ready to go. So I like it. I like the timing of it. Again, this is long term. You want to participate in the Chinese economy coming out of their doldrums. This is definitely something you can look at. The symbol on this one is KWEB. And the new one that's going to come out is which is the Magnificent Eight of China, which I believe it's going to outperform this, is LCKY. So please pay attention. And, all I know is I think China is going to start outperforming the globe. And, I mean, again, we don't recommend things here, but my opinion is you definitely need to start diversifying, because I think U.S. market is absolutely out of control. So that's the second topic. And the third topic I'm going to talk to you guys about is going to be for Gamblers Anonymous. I mean, it truly is that what it is. So you all know we've been talking about options, right? So on options, remember our lingo. We're expanding our lingo, right? We're expanding, we know call option, put option, expiration date, strike price, premium, implied volatility, the Greeks I talked about last week. So for all these videos, you guys can go check all this past stuff on the channel. And so I a while ago, they introduced something called Zero DTE. Zero DTE meaning zero, D for days, T for two, E for expiration. Zero DTE meaning 0 days to expiration. Literally meaning you can trade options on a lot of things, including stocks. On stocks, it's not every day, but on stocks, at least, you have weekly options, right? But if you're trading those options on the day of expiration, which is the Friday, or Monday through Thursday on certain assets, such as the USO, which is the United States Oil Fund, natural gas, gold, silver, TLT is the inverse of treasuries. I mean, the volume on these things, and that's also valid on the S&P 500, on the triple Qs, which is the NASDAQ 100. I mean, the volume on these things has exploded. Millions of options are trading on these things, right? Now, most of it is retail gambling, most of it. A lot of the sellers of these things are the institutions who magically can make indexes get close at a number that they like and have all those options expire worthless. That's how they collect premium. I think this is the worst thing that they could have done. It adds immense amount of volatility, especially when it comes to triple witching hour, which is all three phases of options expire. It happens once a quarter, once every 4 months. That's when all index options expire, and that's when volatility gets created. The last minute, you guys will see hundreds of millions of shares of stock traded because they have to clean up those positions. But that's the technical part. I don't like these, what they do. But then, okay, for example, I'll give you guys an example on GameStop and AMC. What happened, right? Hundreds of thousands of those options were trading when the second phase of the meme stock mania hit a couple of weeks ago, okay? And what happens is that it creates, I talked about it on the channel, it creates something called a gamma squeeze, right? So when somebody buys these options, there has to be a seller on the other side. Well, who's the seller? Most of the time it's institutions and market makers. Because market makers are there to create liquidity for that option. If there is no seller, they have to step up, risk their money, and be the seller of that option. Well, but when they start buying hundreds of thousands of these things, right, for nickels and pennies and sometimes more, well, what does the market maker need to do? And then the stock starts moving in the right direction. They have to go buy the stock, the underlying equity, or the index, or the ETF, to hedge themselves, to cover themselves. And that's what's happening now. On a moment's notice, volatility is picking up on stocks, and stocks are spiking out of the blue. And then they usually return to the mean where they were. And I'm like, this is the purest form of gambling. Literally is, you just kind of throw quarters close to the wall. That's what it is. Do I mess with it? Absolutely not. No need for me to mess with these things. But there are a lot of people who do. And it's basically on a daily basis, you're buying a lottery ticket, right? I mean, you're putting up nothing. You're putting up 10, 20, 30 cents, whatever it is the option is worth. So that's like, $30, $50 for each option. And if you buy 10 of them, it's $300. You could quadruple your money on a single day. For example, yesterday, let's talk a little bit about that. Yesterday, when the market was up due to NVIDIA, and then it completely reversed and tanked, those daily options, Zero DTE options, you would have made a fortune. because you may have bought them a couple of cents and then they ended up going to a couple of bucks. That's like 100x, right? But again, it's purest form of gambling when it comes to options. I don't mess with it. I don't deal with it. I don't want to deal with it because I have enough to do or I'm watching enough. So yeah, these are the three topics. I'm gonna go to my watch list for you guys. You all have homework if you're watching this now or later. I've expanded my watch list because a couple of interesting groups started to move, and I can I always add and take things off my watch list. Like if I take a profit on a stock, if I was right, I will still watch it, but I will have to replenish that watch list because there's new areas of the market that are moving. Not all areas of the market move once, and then I want to find outperformers. I don't want to just be stagnant with the same group of 8, 10, 12 stocks, right? So, before I forget, I want to show you guys my small Robinhood account. I started with 1,000 4 weeks ago. It went up to 2,400, I think, last week. So actually, it started with 1,000. First week, 1189. Second week, 2395. Third week, 2395. So I am at 2025 now. Had a drawdown of $370, still up 100%. Now I have two positions that are open that I have not closed. And you have unrealized gains and losses. Obviously, I have close to $370 unrealized losses at the moment. But by the time I take it, that could be $1,000 extra gain, or it could be, but I will definitely not allow this to go way much below maybe 1,800, 1,850. I will cut the unrealized losses and make it realized losses, and then start the clock again. It is really tough to trade a small account because my big account is doing complete opposite of what this one is doing, because I have more drawdown power, right? So with that said, I will post this on the community page. By the way, I am also posting a lot of good polls and quizzes. I'm going to start doing it. I posted a couple, asked a lot of people, where they think Bitcoin is going to be at the end of 2024. So is it going to be over 100, between 70 and 100, between 40 and 70, or below 40? Interesting poll results, but 40, 50 of you voted. So please go take a look at that. And so with that said, let me quickly answer. If not, I'm going to share my screen as usual, and I'm going to make that big. So let's see. Any questions? Okay, Chris highlighted it. Hey, Chris. Hello. Good afternoon, Sergio. How high do you think NVIDIA will go? I'll show the chart. I think, honest, personally speaking, I spoke to Jack as well, the Barugian. I've spoken to a lot of traders. I think NVIDIA is pretty close to a top. Long term, I don't know. I have no idea. But stock is in an uptrend. If it's in an uptrend, trade with the trend. To be honest with you, NVIDIA may be an exceptional case, but a lot of these AI stuff, I think, is in a bubble. We'll see. Time will tell. Real estate has not done nearly as wrong yet, says Melvin. Well, real estate, I had my swoon, right? My house went from 1.3 million to 650,000. Peter, thank you. Bitcoin has outpaced all other. Well, you have to look at the time frame, right? Bitcoin has outpaced all. Actually, you should go listen to Jack and my conversation regarding Bitcoin. Look, a lot of people are all in. I have a 10% of my value net worth in Bitcoin. I recommended that everybody should have about 10% of their worth in Bitcoin. It's a finite thing. It's an inflation hedge. Is it digital gold? Is it fiat currency? No, because first of all, Megan, a fiat currency does not have the volatility that Bitcoin has, like the US dollar, let's say, right? Is it going to replace the US dollar? Most likely not. But, if you're all in, good luck to you. I would not put all my eggs in the Bitcoin basket. So far, if you consider Bitcoin started at zero, it's at 60,000. Yeah, obviously. But what can you do with your Bitcoin, right? Can you go buy a cup of coffee like a fiat currency? No. And is it going to happen? Most likely in the future. So yeah, I mean, I don't see anything wrong with Bitcoin. I just don't think you should put all your eggs in one basket. And definitely, Bitcoin and Ethereum are the two that I follow. The rest of the shit coins, I mean, I do follow Litecoin and Solana because they're working on really interesting concepts. But if I'm going to buy something, I'm going to buy Bitcoin. I'm curious about funds that are not publicly traded. I saw that on X. It mentioned something about buying into companies before. Yeah, you can definitely, you could have done that with Facebook, and you could have done that with all these IPOs. You could have done that with Uber. There is a platform that you can buy from existing shareholders when they want to sell some of their shares and turn it, like it's happening right now with ChatGPT's owner, right? Every time the VCs come in with money, the valuation of these companies before they go public, they go up, right? And that's how Masa-san in Japan made his billions. When then he lost all his billions, but well, not all of it, obviously. But what they do is the VCs come in, they do a round of investing at $1 billion, let's say, right? And then more VCs come in, businesses expanding before they go public, and the valuation of the company will double, go to 2 billion. It happened with Reddit. It happened with all these companies. And on the third round of investing, it'll go to 5 billion, right? Uber, the same thing happened with Uber, right? It started nowhere, and then by the time insiders were selling some of their shares because they're working there, they need cash. You will be able to invest. It's very, very specified. And in order to be able to do that, you have to have a ton of money. I'm talking a ton of money, right? And you have to be a verified investor. Not everybody just can go and buy shares from existing shareholders of these companies. What's a good indicator for market overbought? RSI is a pretty good one, especially if you relative strength index is a good one I watch, especially if it's doing a bullish and bearish divergence. And you have to, I will explain that next next couple of weeks about bullish and bearish divergences, and I'll show it. Okay, so those are the questions Chris highlighted. So let me go to my charts and let me go through my watch list. Okay, so here's my watch list, and I'm gonna do the markets first, the interest rates, and then talk about stocks. So with that said, so this is what the market is. So I hope you guys can see this. This is the I just made a transaction. You guys saw that on the lower right hand corner. Okay, so this is the triple Qs. This is the 1 minute version, but let's go to the yearly. So yesterday we had where you guys can see my cursor up there. I have my lines drawn, obviously. Don't change much really. Same lines that you guys have seen it. So the question about the RSI, you guys can see this yellow line right here, right? That is the relative strength index, right? So it is doing the right thing, right? There's no complaints. But every time the yellow line gets above 80, just like here towards the middle, market does sell off a little bit, but then it comes right back up as long as it's not below 50. And on this one, it did get below 50. When it's below 50, it has a tendency of staying below 50 on the relative strength index. When it gets above 50, it has a tendency of staying above 50. So yesterday we had a massive reversal. I call this with very high volume. Actually, you guys can see moving my cursor. That's called a reversal day. Market opens up, closes down. It's called a key reversal day, and it covered the last 4 days, which was, we call that an outside key reversal day. Outside key reversal days don't happen that often. Okay, so let me show you guys. There is one right here. Okay, I just highlighted it right here. Okay, this day right here, right? That's a precursor for the market to tell you that, okay, I'm pretty heavy. I'm not feeling that well. I may throw up a little bit. Okay, that's one. Here is another one right here where my cross is at. Small little correction after that. Here's another one. Outside key reversal day. And then, even if the market does do well next few days after that, it usually means the top is pretty close. It doesn't have to be a major top, but a short-term top. Here's another one right here, towards the left. So you have to watch these things, right? Here's another one right here. So you have to watch these things. But at the moment, it's an uptrend, clear uptrend, 50-day, 20-day, and 200-day, nowhere near in jeopardy. So yeah, no complaints. Market's doing fine, still in an uptrend. This is the S&P 500. Same, pretty chart. I mean, nothing wrong with any of this. It's in an uptrend. It had a little bit of a 6-7% swoon, and then it came right back and making new highs. Now, this is on the S&P 500, the RSI is acting weak. Now, if whoever asked me that RSI question, pay attention, please. So when the market made its old high, the RSI was right here, okay? Lower right-hand corner of the screen. I'm moving my cursor. Now, what's going to happen is that even if the market makes a new high, the RSI, the relative strength index, has to make a new high. If it doesn't make a new high, that is the start of a bearish divergence, okay? And bearish divergences don't lie. Bearish divergences, and there are bullish divergences, okay? Here's an example of a bullish divergence. When the market sold off, as you guys can see, RSI got down to about 31, or actually lower, 20 to 29. And then market bounced and market pulled back again. Now, this is called a bullish divergence, meaning RSI is making a higher high while the market's testing its low. I know I'm going fast on this. I will explain this to you guys with examples coming up. But now I'm kind of hoping, well, I'm not hoping, I'm thinking there's going to be a bearish divergence here, even if the market makes a new high now. And lastly, TLT. TLT is the 10-year note. We talked about this on the previous one. This is the inverse indicator, meaning if the TLT is going down, that means interest rates are going up. It's in a clear channel going back to December of last year. It started then, and we tested the top, got rejected, but we are really close. Now, if we break above this line, that means it's going to be a good indicator that the Fed is going to cut interest rates. And you guys need to watch that. TLT is the symbol. So pay attention to the symbol. SPY, write down some notes. SPY, QQQ, TLT. Let's take a look at everybody's favorite Tesla. Tesla indecision pattern, really. You remember, you guys, like it was maybe a couple, 3 weeks ago, I said I'm a seller of Tesla every time it gets to 200. It got to 200, sold off to 170. It's kind of going sideways. The stock has to prove itself, right? A couple of days ago, it had a really massive move up, and then, of course, it didn't follow through. I am not as bearish on Tesla as I was, but there are so many better charts that I'm going to show you guys now that when it starts moving, doing the right thing, then I'll start paying attention. I don't need to pay attention, especially if I'm going to trade it, right? If you got lucky, you got on the bottom here about 140, 150, and you sold it in a few days, great. But I didn't know that was going to happen. And whoever says they did, they're lying. They got lucky. But once the stock proves itself, I mean, then I'll pay more attention to it. There is nothing more, nothing less to say about Tesla. So here's the main watch list. Please get your pencils and pens out and start writing these stocks. So I'm going to go with my main screen. Okay, remember, we've been talking about Alibaba for a while, right? So Alibaba broke out of a 2-year, 3-year, almost 2-year downtrend. You guys can see this. I have this highlighted now. It broke out right about 74, which coincided with it breaking above its 50-day exponential moving average, which is the yellow line, right? What has the stock done since then? Has gone from 74-ish to 90, right? And I had this line drawn way long ago, which is the resistance level, okay? It came up to resistance. Now it's pulling back. In fact, so I'm telling you guys, I am long July $80 calls with an average price of $425, a bunch of them on eBay. I mean, not eBay, Alibaba. What happened? Well, when it got up here, right, it pulled back. It pulled back beautifully, right? And it's given whoever wants to get in a chance to get in, right? and it gave me the chance that I was looking for. It got to 90, pulled back to 80, still above its uptrend, still above the 50-day average. I like it. I bought it. I paid actually right when the stock was 80.25. I bought my options for July expiration, third Friday of July expiration, $80 calls. I paid $4.25. They're about $5 now. But I think the stock is going to retest the high, and I'm going to make a whole bunch of money. So that's Alibaba. The next one is MicroStrategy, which is the surrogate of Bitcoin. We talked about this. Michael Saylor, the genius that he is. I mean, this is the same stock that was on my watch list. What happened? Stock found support right here. The next resistance was about 1400. He blew right through that. The next resistance was about 1575. He blew right through that. Next resistance, these lines are pre-drawn already. So this is what you guys have to do. Pre-draw these lines so you know what happens. It's not a coincidence that it got up to 1750. And then it's a volatile stock. You guys have to have the stomach for it. From 1750 in the last 3 days, it pulled back to 1550, and today it's up $100. So this thing moves $100 at a time. But this kind of moves lockstep with Bitcoin, except that it has about, I don't know, $6 billion premium built in it. Will you be better off trading Bitcoin ETFs? Definitely, especially if you don't have the stomach for it. The next one is going to be Coinbase. These lines have been drawn again. If you guys been watching me for a while, I prep everything and then I'll just let them be until things change. Well, I told you guys this was a pennant formation or a descending triangle. I said, if it does break through, it's going to move. Well, it broke through about 220. Now we're at 240. If Bitcoin moves to 70, 80,000, like a lot of people are saying it will, this thing is going to go right back to the high to 280. So I do not have a position in that. I will tell you guys what I have positions in. Next one is CleanSpark. CleanSpark is a Bitcoin miner. It's going sideways. I have no lines drawn on this because it's just kind of going in a channel, but for you guys, I'll draw a couple of lines while we're looking at it. Okay, it's not letting me do the lines, and now it froze. Did I freeze? Oh, never mind. Okay, here we go. Okay, draw. Here's the resistance line. And here's the support line. All right. Right here is the support line. So, we're going between 15 and 21. I mean, pretty wild, right? 20, 30% range. Just watching it long term. It should be all right if Bitcoin goes up. Here's my favorite that I've owned for at least a month and a half now. Pinduoduo, right? I even drew it. I remember. So this is the resistance line that I showed you. But right here, where my cursor is kind of circling, when it first time it went above its 50-day, that's when I bought the stock about 124. Then it did something that you all should be familiar with now called the flag pattern. This is the flag pull up. It broke out again, another flag pattern. All these flag patterns on low volume like this are continuation patterns. And stock broke out again. Now we're in rarefied air, not all-time highs, but above this massive resistance level as well. And stock is at 158. I mean, look, 124 to 158, and today's high was about 165. I will keep it. This is the trend. Trend is established. There's nothing else to do, right? Next one is going to be Albemarle. I've been watching this. There is a massive opportunity coming on this one way or the other. You guys see this downtrend that I've drawn that goes back to October of 2023, right? So you got to be patient with these things, right? But I like this setup. It's not a joke that it hit that red line, which is the resistance downtrend line, and it got turned back. Once this breaks out of this, and stock has been actually consolidating, going sideways since last November, okay? And here's the support line. So here's your trade on the stock. If this thing breaks out, right, above this downtrend and clears up some of these resistance lines, which I'll draw one for you guys right here. Right here, this is the resistance line right there, which will coincide it breaking the 200-day moving average, which has been under for a year now, right? You buy the stock. Okay. Now, do you want to trade options? Yeah, different story. But we're just talking about stocks now. You buy the stock, and your stop is going to be, if it does break out, is going to be right below these lows, right here. Okay. Your risk is 122. Once it breaks out about 132, you'll buy it. You're risking 10 points to make, God knows, maybe revisit in the 200 level, right? But still, no position, watching. This was on my watch list, I remember. Next one is going to be Wayfair. Here's another here's another stock that had a massive move on good volume. Now it's pulling back. It's still under its long-term downtrend. This thing goes back. Look at this thing, okay? This thing goes back to the pandemic days, right? Here's the clear downtrend. It is squeezing itself. It's been going sideways, basing, right? Patience. You got to be patient. Here's my resistance lines drawn. If it breaks this downtrend line, I'm in. Until then, I watch. And here's another one. Next one is going to be Marathon, MARA. Again, I think I showed this last week. Here's a channel that has kind of squeezed itself inside it. This is another Bitcoin miner, one of the top class ones. Again, it kind of moves up and down with Bitcoin. My lines are drawn. I do not have a position in that. Now, here are the things that I added to my watch list this week. This is Bilibili. It's a Chinese company, Chinese internet company. Clear breakout, okay? Had a massive down day, no big deal. It's still above its 50-day. It's still above its 200-day. It was 17, pulled back to 13 and a half. Kind of a cheapy kind of a stock that you can deal with. What is your risk here? You're a buyer here at 14, okay? And your risk is going to be 1.5 maybe. And for it to get back to 1920, pretty good risk reward. I'm a buyer of the stock right here at 14 and under. The next one is going to be Enphase. This is one of my favorite patterns, honestly. So these are some of the stocks I added to my watch list because I see the rotation happening. Enphase is basically a solar. They do equipment for solar panel companies. And the stock has been as high as 340. Then it came all the way down to 80. Now it's kind of going sideways. It is squeezing itself. It really is squeezing itself. I really like these patterns. Okay. I'm waiting for it to kind of crack above the 200-day, which is right here. I'm on the verge of actually buying this thing. Again, low risk trade. If it goes above the 200-day, about 127, you buy it. What is your risk? Right here is going to be your risk. Here is the risk right here. If it takes out this low, you're out of there. So, you're risking about, the risk is pretty substantial on this, but the reward on this, it's a very fast mover, very high beta stock. So Enphase is that one. ENPH is the symbol. Just make notes and then look at these charts on your own. This is a beautiful chart, okay? First Solar, right? Again, I can see the rotation happening in the market, right? You guys see what I'm trying to explain to you guys. Remember, this looks a lot like Enphase, the one before, when it broke out above the 200-day, like Pinduoduo, right? It breaks out, creates a bull flag, and then now we're off, right? We're off to the races now. These are the types of things you guys need to watch. You have to be patient here while it's going sideways, but once it breaks out, and this is not a coincidence that these things keep repeating. And for me, the important thing is just be patient. The 3 P's, remember? Patience, position, and planning. There you go. Stock has absolutely just rocketed. I am trading the stock in and out with options, but I have a small long-term position in it. And with the breakout, I started buying it exactly where I needed to, right this day, right here, about 162. And now it's in an uptrend, clear uptrend. Any pullback you got to buy is called First Solar. And this is what I'm seeing in the marketplace, by the way, right? These are the changes that I'm seeing in the marketplace. Super microcomputer, NVIDIA surrogate, not my favorite. NVIDIA's making new highs. This thing, no. I may actually delete that. Carvana is another favorite of mine. Okay. Stock is in a clear uptrend. On the earnings, it blew out. It went as high as 130. Now it's down to 110. It's pulling back. It's pulling back to its 20-day moving average right here. Will it pull back to the top? This is support. Let me draw support. So old resistance, guys, becomes support next. So this was old resistance. It blew right through it. Now this is going to consider itself as support, and it happens to be right at the 50-day average. So if it pulls back a little bit more, if the market goes a little nasty and gives you an opportunity, definitely get in about 100, 95 to 100 range. Pretty low risk trade. The next one is going to be, this is one of my favorites. I've been long the stock for a while, and I've been talking to you guys about the stock for a while. You can go back and check all these videos. So this has been on my watch list for at least 3 weeks now. And okay, when did I buy the stock? Okay, right here, when it broke above. See, it's like repeating, basically. I keep repeating. Broke above the 200 moving average. It's above the 50-day. It's above the 20-day. Clear uptrend established. In fact, it hit, and I think last week was right about here somewhere, right here. Earnings came out. What happened? Stock goes down from almost 19.5 to about 17, right? Huge buying opportunity. And today we're at a new high now. This is what happens to stocks. When they get going, you want to be in here, right here, what I'm circling right here. You want to wait for your breakout, and you want to be patient for the breakout. These are your setups that you guys need to watch. Stop being the stock jockey. Stop getting in and out. Stop buying those zero DTE options. No need. There is plenty of money to be made. You just got to find the stocks. Well, I'm giving you guys the watch list. And then next one, new on my list, is called Bloom Energy. Again, another solar stock. Again, broke out at about 13. Okay. And I'm selling, actually, I'll show you guys that. I'm selling stock while I'm talking to you guys. Broke above the 200-day moving average. Again, you guys, all I'm trying to explain to you guys is that the setup is the key. What are we watching for, right? And what is it that you need to watch for? Well, here's a clear downtrend, right? Right here. One high, another high, right here. Do you guys see all the time when these downtrends break, these long-term downtrends? And you guys may think, oh, Sergio, it's 2 years ago. Who's watching that? Trust me, algorithms are watching that, okay? And again and again, these are the setups. You guys notice the 200-day moving average? It's under the 200-day moving average forever. Once it goes above it, it's already above the 50 and the 20, right? It kind of coincides. It's going above the 200-day moving average with it breaking the downtrend, the 3-year downtrend, right? That's when you get on. You need to just put them on your watch list, put a stop or put a limit, buy stop if you're not paying attention, or if you're watching it, buy it. Your risk is very low here, right? About 12.5 in 3 days goes up to 18. Now it's pulling back. I'm a buyer of the stock on any pullback, like I'm on Alibaba. The next one, actually, I wrote these things down for you guys. Coinbase 10, Riot. Okay, so there are a couple of small stocks that I really like. Now, these are for the low budget, right? This is called Iris Energy. I love patterns like this, okay? It's going kind of sideways. It's kind of volatile. You can trade this if you guys want to be the jockeys that you want to be. Going back, again, it used to be in the 26.30 level. It's an $8 number. It's approaching a little bit of a resistance here, but it's a clear look. This is the homework that you guys need to do. I didn't draw these, so I draw it with you guys. Here's the support line. Okay, clear support. Every time it gets there, it bounces. Every time it gets there, it bounces. So it was 4 to 5.5. This time it's breaking out. Why is it breaking out? Here's the trend line right here. Okay, it's breaking out on massive volume. Look at my cursor on the lower right-hand corner, right? A buyer on any pullback. And it broke out right about 6.5. Stock is about $8.50, 30%. You want to be a stock jockey? Knock yourselves out. These are the small stocks that I'm showing you guys, that they're, mid cap, small stock. They're not billions of dollars in market cap. Okay, I'm going to show you a couple of high risk micro cap stocks, okay, that I'm watching, that I may even day trade myself. Here's one. Remember what we talked about, right? This is called TPI Composites. Here's the 200-day average. It's breaking above the 200-day average. And look at this. Look at this. It's been under it for so long, right? Now it's kind of coming out of sleep. Now I look at this as a bear in hibernation. What happens to a bear when it wakes up? It's hungry. Well, institutions are hungry for this, right? It's just breaking out now. This thing used to be as high as 50. Is it going to go to 50? I really don't care. Is it going to go to 10? Hell yeah. Is it going to go to maybe 12? Absolutely. What is your risk reward? Pay attention. Your risk reward is pretty low. Stock was as low as $2.30. It doubled already, right? Okay, that's fine. So on pullbacks to the 50-day, which is about 3.5, here's your risk. Even if you buy it right now, you just go, okay, Sergio recommended this. I'm going to go buy it. I'm not recommending anything here, by the way, so you guys know. I'm just talking about it. Here's the support line. Here's your risk right here, right there. If you bought it at 460, you're risking 360, right? Or you're risking the 50-day average. And buy it and forget it. Hold it. Just hold it. That's it. But you know your stop point, right? Your stop point is right here, the line that I drew. Now, there's one key resistance on this. If it goes above this, I'm telling you guys, this thing is going to take off like a bear shot on its ass. That's the resistance line right there. It's about $5. Now, the other important thing about $5 is that a lot of institutions are not allowed to buy stocks that are below $5. Okay, once this thing goes above 5, God knows what's going to happen. And last one, before I answer more questions, is TSHA. You guys can rewatch this and write these symbols down. Another beautiful pattern. I love these patterns. Okay, these are my best setups. This is called Taysha Gene Therapy. This is a biotech company, small biotech company. Let's take it back to see where it was. You guys see what's happening here? That all these stocks that I watch, if you go back a while, they got shot and obliterated and got killed, but now they're coming out of hibernation. Okay, here's a beautiful chart. Now, if you look at the long-term picture, this thing was like $30. It came all the way down to nothing. And then biotech stocks are a lot more volatile, right? And then miracle of miracles. This right here, they had some good news on a new drug that they're working on. You guys can see the breakout. It literally went from 75 cents to $3.75 in a matter of 10 days or 11 trading days. Then it kind of digested on low volume, then had another up move, had another. So here I'm going to draw these lines and I'm going to leave this. Actually, I'm going to look at NVIDIA one last time for you guys. Here is the trend line. Remember this pattern? What is this pattern called? Remember? Come on now. And here's this pattern right here. What is this called, guys? Come on now. You guys should know this by now. It's kind of a consolidation pattern, kind of a large triangle-ish kind of a thing that is squeezing out of, except that it's breaking out today. And now you guys need to watch this, right? Put it on your calendar. It's a $3 stock, right? It was to be 50. I mean, again, these things don't have to go to 50 for you to double your money, right? These are low risk, also a little bit more, not exactly low risk, but they are things that I put up just for the fact that on the small universe, I'm watching it because you guys are going to say, oh, Serge, it's only like hundreds of dollars of shares. Well, it doesn't have to be that way. I'm going to finish with NVIDIA. I'm going a little long today just for the fact that there is no market on Monday. NVIDIA, beautiful uptrend. It had a breakdown. Institutions bought it, no problem. And here it is. Yesterday, earnings came out. Right here was the resistance. It gapped up. It looks just like Carvana, right? Doesn't it? And above the 50-day, it's been above the 200-day, God knows for how long. I don't know, like since $170 a share. It has its little swoons, but it's getting a little more volatile now, right? I mean, it's $1,000 stock, although They did announce a 10-for-1 split, meaning the stock, I think in a couple of weeks, is going to be $100 a share. 10-for-1 means for each share of NVIDIA owner is going to get 10 shares. Does it add anything? Does it change anything? Absolutely not. A lot of people think stocks go up in splits. I mean, don't think like that. If you do, you're not at the right school. But yeah, nothing wrong with the stock. And with that said, let's see if you guys have any questions. Tesla is moving up the right direction. Alibaba, so is Alibaba. This is the stock I sold, actually, while we were talking. I had bought 4,000 shares of Serve Robotics, and I'll show you guys what I have done with that. Here's the realized gains and losses. This is my trading account, right? So I had bought 4,000 shares yesterday with an average price of 193, and I sold it today at 240, 250, 260, and I'm done. Here's the 4,000 shares out. 800, 1,500, about, I don't know, $2,100 in a day, no problem. Thank you very much. But now let's see the questions. Where are the questions? You guys have any questions? Okay, here we go. Let's see. All right. I'm not all in. Okay, questions? No questions? Ondo is connected with BlackRock. Could be. I don't know what that is. Do you know much about CoinBot? Nope. What time period do you use daily for flagpole? Analyze BZFD, please. Okay, I will look at that. I don't know about I don't think that question is properly put together. What time period do you use daily? Okay, well, daily. What do you mean? What time period? Daily. I showed you the flagpole on Pinduoduo. My girlfriend's tech friends like Hive for Bitcoin mining. Well, so let's take a look at Hive, and let's take a look at BZFT. Okay, let's see. Hive. Garbage. Sorry. I mean, look at, compare that to Marathon, or compare that to, here's the competitor, Mara. Which one looks better? Here's Clean Spark. No, I don't like Hive. You can have it. It's a low price stock. I mean, no insult, but is there a downtrend and an uptrend here? Complete downtrend. It's $2.50, 60 cents. Bitcoin is at 67,000. This thing is at 260. Bitcoin is going up, and this thing is going the other direction. You got to be really careful with these things. No, I don't like Hive. BZ. Was it BZFT? Yeah, BZFT. BuzzFeed. Nice. A gambling stock. Okay, it's above its 200-day. You know where your risks are at. Would I buy it? Look, I know who you are. When a stock trades 73 million shares in one day, it could be easily a pump and dump. I'd be super, 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 super careful with these things. I showed you guys the problem with the falling knife, right? Here, let me show you a falling knife, people. You guys want to see a falling knife? CTNT. Look at this falling knife. How do you guys like this one? Huh? Same thing. Stock has only 6 million shares out. It trades 50 million shares. It goes from literally $1.50 to 14 right here in 4 days. Yeah, if you are in here, awesome. Then what happens? Trading halt after trading halt after trading halt. Guess where it's at now, guys? 94 cents. There is your classic falling knife. Do not mess with these pump and dumps. BZFT looks like a pump and dump to me. I hope it's not, for your sake, because that huge volume of bars, yeah, that is definitely not going to be a bull flag. The reason for that is it had one as high as 450. The same day it closed at 3. It closed 30% below its high. Don't like it. If it was going to be one like PDD, okay, look at the difference of the flag on that one. It flags up, goes sideways, flags up, goes sideways. That one looks more like this right here on PDD when it had earnings came out, and then it kind of disappeared. So I don't like either chart. And definitely BZFT could be definitely a pump and dump. Yep, it had those kind of things before. You guys see this big move right here in February of 2023. It went from $4 to $18 in 2 days, and then the shorts come in and short the garbage out of it, and it goes down to nothing, to $1. So yeah, I don't like either one. Sorry to rain on your parades, but don't like it. Any other questions, please? I will answer it now. Okay. See big picture. Yeah, I did look at the big picture. Still don't like it. Do you buy in the money, out of the money? Depends on implied volatility. Kuber says, do you buy in or out? Depends. Like on Alibaba, I bought at the money options when the stock was 80.25. I bought the July 80s. Depends on what kind of move I'm looking at. Depends on implied volatility. Depends if earnings are coming out. If the short duration is a lot more expensive than the long. It depends on a lot of things. But I like to go out a month out, usually about a month out, just to give myself some time, because with options, you have to be right in the direction and you have to be right in the duration, because we talked about it, right? We talked about intrinsic and extrinsic values. There's going to be time decay. If the stock doesn't move your direction during that time period, that option is going to expire worthless, right? So you're dealing with time decay. And we talked about the Greeks last week. You're dealing with theta. So you guys need to pay attention to that. Most of the time, because I'm a swing trader or position trader, that's why on Alibaba, I bought the Julys. Junes were like about 25% less. But then July gives me about 60 days. 60 days is about my trading range. Now, if Alibaba goes from 80 to 90 in between, I will sell the Julys. I don't care. I will still sell it and make money. But I'd rather pay about 20% more premium to buy myself another month. But you have to pay attention to all these things when you're paying attention to these things. Can we do trades with play money to get comfortable? Absolutely. That's called paper trading. Although I would like you to go watch the interview with Jack Barugian. Truly the OG. I mean, he is the OG of trading. This guy has traded from the days of what you see behind me. He created the Chicago Mercantile Exchange S&P 500 index. Okay, this guy is the man. He was on CNBC for 20 years. And he graced me with his presence and showed up. I interviewed him for 2 episodes. One is already on the channel. Next one's coming out Wednesday. Please go watch it. And please, we talked about paper trading, right? You can paper trade all you want, right? But when the money is on the line, you see, a lot of paper traders will make money, because it's okay. Paper trading is like playing a video game. When you get killed in a video game, what do? You push replay or reset, and then you play again. No harm, no foul. But when you have the money on the line, your emotions get involved. Everything gets involved. It becomes so much harder. So I'm not against paper trading, but it doesn't do much. It really doesn't. Size down and trade with real money, okay? Today, you can open a Robinhood account with $1,000, $500. Instead of buying, 1,000 shares like I do, go buy 1 share. Real money, right? Now, I know you're going to say, well, I'm not going to be a millionaire. Well, you're not going to be a millionaire with $1,000 account anyway, okay? My point is, instead of paper trading, trade with real money. Open a $100 account, buy half a share. But you have skin in the game, right? Because a lot of paper traders, when they get into the real world, they get their car, get in the race, they hit every single wall possible, and then they blow their account. So if there is no other questions, I'm going to say goodbye to you all. Much love. Stay healthy. Happy, what is it, Memorial Day? I'm not even sure. Anyway, but Monday markets are closed. I'm not going to be here. We'll see you guys next Friday. Hope you guys learn. Please rewatch it. Please take those symbols down that I showed you guys. Please look at what I'm watching. I gave you my trades. I'm really watching Tesla actually pretty closely. It's kind of going sideways. If it does break out here about 185, I think I'm all over the options, especially July $200 options. All these other stocks, man, look, they're there. You just got to find them, study them, look at the setups. That's the best for you. Forget all this nonsense on YouTube. Okay. Oh, this is good. This is bad. No, have a setup that has worked for you. Okay. And when I share my actual trading account next week with you guys, I'll go deep into it, the success rate and returns and all these things. But to me, have a golden setup. My golden setup is 2-year downtrend, breaking out at the same time a stock's going above a 200-day moving average. Just buy the damn thing. Don't even think about it, right? Are they all going to be winners? No. But it doesn't matter, because that's the start of a longer term trend. When stocks do those things, they have a tendency of going up 50, 80, 100%. I'm happy with that. You know, a lot of jockeys are go like, oh, I gotta be hummingbird, and I gotta be at the races. I gotta get on different horses. I'm like, no, I want to get on one good horse, one good thoroughbred, and make my money for the year. And I'm done. See you later. Okay, that's the whole idea here. Don't be a hummingbird going from flower to flower to flower to flower. I'm like, no. Every week I have my trading list. I have my watch list. I watch. I wait patiently. When it does happen, though, I'm on it. Okay. So with that said, yes, Eric, right here. So you go all have a good long weekend, and we'll see you guys next Friday.